Good morning, madam. My name is Inthumathi and my partner is Vitiyasini Nair. For the security analysis and portfolio management, we have chosen Gamura Berhad and Hartalega Holding Berhad for our final project. Okay, the company background is for Gamura Berhad is a public listed company in the main board of Bursa, Malaysia. Founded in 1976, it has grown from the construction-based enterprise to become Malaysia's leading infrastructure developer with core competencies in engineering and construction, infrastructure, concessions, as well as a lifestyle property and township development. Gamura Berhad is a civil engineering, infrastructure, and township development company. It principally offers engineering and construction, infrastructure concessions, and property development. Hartalega Berhad was the inventor of the world's first lightweight nitrile glove in 2005, which caused a demand shift from the latex to nitrile glove all over the globe. Needless to say, we are now a largest producer of nitrile glove in the world. Capable will progressively expand to 43.7 billion glove into 2020. Hartalega was a creator of the first soft stretchy nitrile glove. Gamura Berhad. The vision of the Gamura Berhad is to lead a region an innovative breakthrough solution for large-scale public infrastructure and property development. The mission of the Gamura Berhad is a reliable, deliver innovative world-class infrastructure and premier lifestyle properties to our customers throughout our core businesses in infrastructure development and construction, operation of infrastructure, facilities, and property development. For the Hartalega Holding Berhad, the vision of the Hartalega is to be a number of one glove company that produce and deliver a best of the most innovative glove in the world, and to be recognized as the caring company to the community and environment. The mission of the Hartalega is to deliver a best possible protection to people who work with their hands in exposed and challenging environment by providing consistently superior, safer, and more convenient gloves in chosen product markets. For the single asset, the arithmetic mean shows the graph when we compare the arithmetic between the Hartalega Holding and Gamura Berhad, the percentage was high arithmetic mean Hartalega. The percentage of the Hartalega show 90% out of 100, and the Gamura has poor arithmetic mean compared to the other one. From this, we can conclude that arithmetic mean shows the Hartalega is the best company for investors can be invest. The second is coefficients of variance. For what reason we need one measure? For example, the coefficients variance. The standard deviation of two district informational collection is fertile. However, looking at coefficients of variety is not. We include towards standard deviation over difference since a straightforwardly interpretable. The variance. The variance is a fluctuation in insights and estimation of the spread between number of information index, that is a quantifies of each number of set from the mean and accordingly from each other number in the set in light and both organizations. We can discuss that Hartalega Holdings change is higher, which is negative 100%, contrast with Gamuda, which is 0%. When the difference is I alert, the normal of the square good waste from the each highlight the mean. Okay, for the portfolio selection, expected return portfolio is the profit for the loss of investors anticipate on investment that is known as anticipate rate of return, which is ROE. To calculate a portfolio expected return, an investor need to calculate the expected return of the each holdings as well as overall the weight of the holdings. The basic expected return formula involves multiplying each asset asset weight in the portfolio by expecting return and adding those figures together. Based on the chart, we know that the expected return portfolio is increasing steadily. So we can expect that average of the probability distribution of all possible income for Gamuda and Hathalega will be high. The expected is usually based on the historical data and therefore not guaranteed. The second is the standard deviation portfolio. Standard deviation calculated based on the standard deviation which of the returns of each asset in the portfolio, the proportion of each asset overall portfolio. For example, respective weight in the total portfolio and also the correlation between each pair of the asset in the portfolio. Standard deviation implies less volatility and more stability in the return of the portfolio, and it is very useful in financial metric when comparing different portfolios. In case we can analyze that the standard deviation portfolio for Gamuda and Hathalega was increased steadily. The third is the CPAM, which is Capital Asset Pricing Model. The capital asset pricing model describes the relation between the systematic risk and the expected return for the asset, particularly stocks. There are also a way to calculate the RRI is used to use the capital asset pricing, which is CAPM, typically used by the investors for the stocks. Stocks will be bets the greater than 1 are the considered riskier than the other overall market, whereas stocks will beat the less than 1 are considered less risky than the overall. From this data, we can conclude the Gamuda and Hathalega are less riskier company because both of the companies are F beta, which is less than 1. For the fundamental analysis, I will pass to Vitiyasini.
Okay. I'm Vitiyasini. I'm going to explain about the fundamental analysis. Firstly, for the economic analysis, Gamuda Berhad is an engineering construction company that also investment holding company that is based in Malaysia. The company was established on October 6, 1976, also listed in Bursa Malaysia after 16 years old, which is on 1992. Gamuda Berhad is one of the largest Malaysian construction companies and has handled various projects such as the latest public transport, which is MRT lines. There are some operation activities such as and expressway concessions and property development and club operation. For the Athalega Holdings Berhad, an investment holding company engaged in the manufacture and sale of latex gloves. The company also offers nitrile gloves, including examination and surgical gloves. In addition, it engaged in the retail and wholesale of gloves, leasing of property, and the research and development of automation system. Athalega Holdings has operation in North America, South America, Malaysia, and other Asian countries and Europe. The company was founded in 1988 and is based in Kuala Lumpur, Malaysia. Next slide, please. Okay, moving to the next part, which is the industry analysis. Gamuda Berhad have two top competitors, which are Paramount Corporation, Opel Holdings Limited. The Paramount Corporation is company listed on the main board of Bursa Malaysia Securities Berhad, with property development as its core business, guided by its vision of changing lives in enriching communities for a better world. Paramount offer outstanding quality and value in its product and services. Paramount is backed by a talented workforce, sound fundamental, and good corporate governance. And the Opel Holdings Limited, a Hong Kong-based group, was listed on the Stock Exchange of Hong Kong in 1972. Opel has diverse business interests and spreading across property, investment, and development, highway, infrastructure, power, auto, and hospitality business. The group, with strong expertise in investment development and engineering of major projects, focuses on Hong Kong and the Pearl River Delta region in PRC and is founded on visionary strategic. Athalega has two competitors, which are Ansell and Medline. Ansell operates as a multinational company that manufactures, distributes, and markets protective products and services related to professional, occupational, and consumer healthcare. The firm's product line includes surgical and examination gloves, industrial and protection household gloves, and condoms. Ansell underwent a major reorganization in the late of 1990s into the 2000s, selling off a host of business unrelated to its healthcare related product group. Medline is the largest privately held manufacturer and distributor of medical supplies uniquely positioned to provide products, education, and support across the continuum of care. The ability to bring best practices from one care setting to another, from large healthcare system and uh, independent practices to home health patients and their families. The next is company analysis. For the gross profit margin is a firstly for the Gamuda, the gross profit margin is a metric analysis used to assess a company's financial health by calculating the amount of money left over from product sales after subtracting the cost of goods sold. A higher gross profit rate indicates the company can make a reasonable profit on sales. Based on the graph, the gross profit rate for Gamuda shows that it has decreased pattern. In the year of 2017-2018, the gross profit rate decreased by 1.971%, and 2018 to 2019 it decreased by 0.705%. In the following year, it increased by 0.118%. Next, the return on sales is a ratio used to evaluate a company's operational efficiency. Based on the graph, the return sales for Gamuda shows that it has increased and decreased pattern. In the year of 2017-2018, the ROS decreased by 0.013. 2018 to 2019, it increased by 0.284%, and in the following year, it decreased by 0.377%. And current ratio is a liquidity ratio which measures a company's ability to pay its current liability with cash generated from its current asset. A current ratio of 1 is safe because it means the current assets are more than current liabilities and the company should not face any liquidity problem. Based on the graph, the current ratio for Gamda shows that it has a decrease and increase pattern. In the year of 2017-2018, the current ratio decreased by 0.522%, and in 2018 to 2019, it increased by 0.4%, and in the following year, it increased by 0.098%. And then the working capital is a measure of company's liquidity, operational efficiency, and its short-term financial health. If a company's current assets do not exceed its current liabilities, then it may have trouble growing or paying back creditors or even go bankrupt. Based on the graph, in the year of 2020, have more profit compared to the other years. It means Gamra Murad has better performance in the year of 2020, which is 2,979,000. And then the total debt ratio is from a pure risk perspective. Debt ratios of zero point 0.4 or lower are considered better, while a debt ratio of zero point 0.6 or higher make it more difficult to borrow money. Total debt ratio for Gambra shows that it has a increase and decrease pattern. In the year of 2017-2018, the total debt ratio increased by 0.043. In the year of 2018 to 2019, it increased by 0.02%. And then for the Attalega, the gross profit ratio of Attalega shows the rate of gross profit in 2017 to 2020. The gross company's gross profit percentage is calculated by first subtracting the cost of goods sold from the net sales, which is the graph shows the rate in 2017 was high, which is 1.733 compared to other rate, and the lowest rate was in 2018, which is 1.401. The rate in 2019 was 1.556, and in 2020 was 1.710. The graph shows that the ROS for the Atalega, the ROS is a ratio used to evaluate company's operational efficiency, and increasing ROS indicates the company is growing more efficiently, while a decreasing ROS could signal impending financial troubles. In graph, that shows that return on sales in 2018 was highest compared to the other rates. So the company was good growing in 2018. The current ratio graph shows the rate of 2017 until 2020 of Attalega Holdings in Attalega Holdings. In 2017, the ratio was 7.415 and 2018 was 2.095. It continues in 2018 with the same ratio on previous. Finally, in 2020, the ratio was 2.674. So, from this data, we conclude that the highest ratio was 7.415 in 2017. The total debt ratio is category is important because the companies rely on a mixture of equity and debt to finance their operation, and knowing the amount of debt held by a company is useful in evaluating whether it can pay off its debt as they come due. The highest ratio in 2017, which is 0.263. The lowest ratio was in 2020, which is 0.233. So the next slide, please. So the next slide for the technical analysis, the diagram in the slide shows the candlestick pattern of Gamda Murat. From the candlestick chart, we can conclude that there has been downtrend as in overall. But when we look deeper into the patterns, various patterns can be seen such as Dragonfly Doji, bearish reversal from September 2016 to October 2017, Dragonfly Doji bullish reversal from October 2017 to January 2018, 3 inside a bullish reversal from January 2018 to May 2019, Doji star bearish reversal from May 2019 to June 2020. From this, we can conclude that the liquidity has started being low, probably meaning that the investor decided to sell the shares in this period, and it would also be difficult as there were not many buyers in the market for Gamda Berat. The next diagram shows the candlestick pattern of Attalega Holdings Berat. From the diagram, we can conclude that there has been uptrend as in overall, but when we look deeper into the patterns, various patterns can be seen such as evening star bearish reversal from December 2016 to February 2017, Englishing bullish reversal from February 2017 to March 2017, 3 outside up bullish reversal from March 2017 to October 2017, 3 inside up bullish reversal from October 2017 to July 2019, engulfing uh, bearish reversal from July 2019 to January 2020, 3 outside a bullish reversal from January 2020 to June 2020. This we can conclude that the liquidity has started being high, probably meaning that the investor decided to buy the shares in these periods, and it would also be easy as there were many buyers in the market for Artalega Holdings. The next slide, please. Okay, from the overall result of Gamuda, Berat, and Artalega, we have learned a lot of information about the achievement and techniques of companies. Effective risk management contributes to effective governance and is integral to the achievement of business objective. It is the responsibility of every employee of the organization to manage risk within their areas of responsibility. Risk management should be embedded into day-to-day management processes and is explicitly applied in decision making and strategic planning. The risk management process applied should aim to take advantage of opportunities, manage uncertainties, and minimize threats. Regular reporting and monitoring activities emphasize the accountability and responsibility for managing risk. In my opinion, from the overall analysis, we recommend that Gamuda Berat should increase workforce capital to support career progression and succession management. Development programs have been introduced for first time managers and high potential employee. This gives the employee clear direction on or career path, ensuring continuity, performance, and results. Gamuda Berat can transforming the way they work. They can continue to make strategic investment in technology to increase their operational capabilities with the view of helping them achieve competitiveness and ability to respond to changes in the market. Automation will also help them optimize operating costs. In conclusion, the Gamuda has a good opportunity to improve workforce capital. Technology will enable them to focus their resources more strategically and enlarge the group's capacity to innovate. So that's all from us, madam. Thank you.
Thank you, madam.